Welcome to Fear and Greed, business news you can use. Today, the federal government unveils the biggest overhaul of the Defence Department in 50 years. The medicines regulator warns of potential dire side effects of weight loss drugs. And Metcash says it has lost $340 million in cigarette sales because of the illegal tobacco market. Plus, the ASX suffers another embarrassing outage. And consultancy group Accenture takes corporate jargon to a whole new level. It is Tuesday, the 2nd of December 2025. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, the federal government will create an independent agency to manage defence projects in what it described as the biggest overhaul of the department in 50 years.
In effect, the Department of Defence will be downsized considerably, losing about 40% of its budget, 1/4 of its employees, and responsibility for delivering major defence projects. 3 existing divisions of defence, one's called the Capability Acquisition and Sustainment Group. Doesn't that roll off the tongue? Capability Acquisition and Sustainment Group. The Guided Weapons and Explosives Ordnance Group, which is kind of a cool group to be part of. And the Naval Shipbuilding and Sustainment Group. They'll all shift into a newly created Defence Delivery Agency, which will be operational from July next year, independent from July 2027. There's been a bunch of reviews into defence that have recommended the creation of an independent project management agency. Yesterday, Acting Prime Minister Richard Marles, who of course is also Defence Minister, he's acting because Anthony Albanese and Jodie Hayden are on their honeymoon. So Richard Marles said the changes will greatly improve the quality of the defence spend. He said it's one of the biggest changes to defence ever. It also will theoretically provide better oversight on the defence budget. Now, the defence budget is huge, $56 billion, 2% of GDP. That's scheduled to rise to about $100 billion by 2034. So a little bit of oversight is probably a very good thing.
Yeah, you're probably right. It sounds like a lot of money, right? But Australia's defence budget, when you look at it as a percentage of GDP, it is relatively small compared to other countries.
Yes, even after the boost in spending over the next decade, it will still be well short of what Donald Trump reckons regional allies like Australia should spend. He thinks we should be spending 3.5% of GDP. That would mean we'd have to probably add another $200 billion or $100 billion on top of the $100 billion we've already got. Trump demanded that European allies increase spending to 5% of GDP. Now, they haven't done that yet, although Poland is pretty close to it. But undoubtedly, there's a surge in defence-related spending. Now, a lot of that in Europe and potentially here includes infrastructure. So you might build bridges between islands in Spain, for example, and that's considered defence spending because it actually is creating a more defensible peninsula, as the case may be. But certainly a lot of pressure on defence spending, and as a result, you really need much, much greater oversight. And I don't think anyone's going to stand up there and say, hey, the Department of Defence is the role model for transparency. It's just not, and the government's trying to improve it.
Yeah. Though that bridge example, I think it was Italy, wasn't it, with the bridge to Sicily, and they were going to call it as it
was Italy. I said Spain. Yes.
Yeah,
yes,
but
right.
and that particular one was, hey, this is going to count towards increasing our GDP, which just sounds an awful lot like creative accounting.
Well, it's interesting. I was speaking to an expert about that, and they said, no, that it's actually okay because if you have a bridge, Sicily becomes much more defendable. So it actually is defence spending.
Also feels like it gives it something easy to target the bridge, right? Anyway, just on the defence topic though, Richard Marles yesterday said that Australia is monitoring a naval flotilla that is travelling through the Philippine Sea with an unknown destination.
That's right. The Philippine Sea is well north of Australia. It's north of Papua New Guinea and Indonesia, but the government is keeping a very close watch on the flotilla. In February this year, of course, the Chinese fleet circumnavigated Australia, an act not considered friendly by the ALP government, and it's keeping a very close watch on this one.
Yeah, okay. Turning from defence to the markets, how did the ASX go yesterday?
The S&P ASX 200 fell a little over 0.5% to 8,565 points. Healthcare stocks led the market lower. CSL and Sigma both off 1.4%. Consumer staples were also lower. The big banks dropped. Bit of a rotation going on at the moment, Michael, out of financials into materials. That happened again yesterday. That's as a result, BHP, Fortescue Metals Group, Rio Tinto were all higher.
And plenty more to talk about later with the absolute debacle that went on yesterday for the ASX, but we'll do that in a moment. Bitcoin has fallen back below $86,000 a unit. Markets fearing uncertainty, particularly in the US economy.
That's right. Other cryptos fell as well. Ether was down 7%. Solana dropped 8%. Otherwise, in global markets, US President Donald Trump said he's decided on his pick for the next Federal Reserve chair, and he expects that nominee to deliver interest rate cuts. Don't know who that might be, but we'll wait and see. In currency markets, the Aussie dollar is trading about that 65.5 US cents.
And that's the subject of today's Q&A, Sean. Coming up after the show, you're speaking with Ray Attrell from NAB.
That's exactly right. Foreign currencies, the Aussie dollar, I did a thesis on the Aussie dollar when I did my honours year at university.
How am I only finding this out now?
Well, I don't think it was a very good thesis, but it's kind of interesting, the Aussie dollar. It matters so much because it's the pricing mechanism for everything that goes in and out of the country.
Yeah.
Yet what drives it is changing. And so you talk to Ray, like we're always a commodities currency. That seems to be changing. And we talked to Ray about that. It's really, really interesting, particularly when you spent so much of your time doing a thesis on foreign exchange. And
it's probably not the kind of thing you open conversations with, is it? Like, no, hey, I did a thesis on this.
You'd like to meet, at that age in your early 20s, and you're trying to meet people and say, what's your thesis on the Aussie dollar? Never got me very far, Michael. No. Never got me very far.
That's a one-way ticket to Singletown. Anyway, quick break. Back in a moment with the rest of the day's business news. Sean, Australia's medicines regulator has issued a safety warning over the risk of suicidal thoughts and behaviour linked to drugs known as GLP-1 receptor agonists, including Ozempic, most commonly.
Yes, the Therapeutic Goods Administration also said a link between some GLP-1 drugs and reduced effectiveness of oral contraception could not be ruled out. In a safety alert issued yesterday, the TGA said it had updated warnings for the high-profile drugs used to treat type 2 diabetes and obesity. So Ozempic's one, Wegovy, Saxenda, Trulicity, Mounjaro is another. The alert read, I quote, patients taking these medicines should tell their health professional if they experience new or worsening depression, suicidal thoughts, or any unusual changes in mood or behaviour. The GLP-1 drugs have a very short track record. Some medical professionals have been very wary about the unknown longer-term side effects. Now, the fact that the TGA has come out and provided this warning means that they're certainly taking it seriously.
Now, I mentioned before the break the ASX and the situation it had yesterday, an outage yesterday morning that meant around 80 companies couldn't put out announcements, which frustrated the heck out of companies and investors alike.
The incident occurred just before 9 a.m. and stopped the release of the announcements, some of which were time sensitive. It lasted about 3 hours. Now, shares started trading without any hiccups. Perhaps the company hit most, Metcash, the grocery wholesaler. It was forced to place its shares into a trading halt after being unable to release a presentation detailing its first half results. It has been a tumultuous few years at the ASX Limited, from a failed upgrade of its settlement systems to a damaging trading settlements outage, the release of information saying TPG was buying a software development business when it was actually TPG Capital Asia. We have ASIC and the Reserve Bank looking into it. Yesterday does not help ASX.
No, puts us a little bit more pressure. You mentioned Metcash there. Management at Metcash might have been unhappy about the outage, and I suspect they were, but I reckon they'd be even more unhappy about the reaction to their half-year results once share trading began again. Metcash closed down more than 9% yesterday.
That's right. The grocery wholesaler, best known for supplying IGA stores, posted a small increase in half-year revenue. But the big news, Michael, they lost more than $340 million in tobacco sales, or tobacco sales were down that much. That's because the illegal trade in cigarettes is so strong. The black market's out of control. It's hit Coles and Woolies, Viva Energy, which owns Shell-branded service stations, Ampol. Now, the government's increased tobacco excise by more than 280% since 2013, pushing the cost of a 25-pack of cigarettes to about $50. $34 of that $50 goes to the government. So people, beautiful example of supply and demand, right? The supply's there, but demand's not because they're just too expensive. So the black market is thriving.
Sean, on that, I was speaking to somebody recently, very respected business person, and they were talking about the fact that they are still a smoker, and they said that they have started buying cigarettes, black market cigarettes, because the cost difference is so extreme that it is less than half the price of buying it from an official retailer and paying all of the official excises and taxes and things. And I thought, okay, if this person is someone who I would never expect to do that kind of thing is doing it because the margin, the difference is so great, then there is seriously a problem there.
Yeah. I don't know much about the economics of it. I don't know where you buy cigarettes from online and whether they're taxed or whether it's stolen property or whether it's actually not stolen property, but just avoiding tax rates. I know nothing about it. But clearly when you have, kind of reputable people doing it, there's some issue.
Yeah, it might be one for Fear and Greed Q&A. We could delve into that one in a little bit more detail. Treasury Wine Estates, Sean, away from cigarettes, has bowed to the inevitable, saying it will book a significant non-cash impairment against its US operations, with all $687 million of America's goodwill likely to be written off.
Not really away from ciggies, like a red wine, a cigarette.
They seem to go together quite well. Yeah. I can just picture you in that bar trying to chat people up about your thesis.
That's right.
Glass of red wine, a durry in the other hand. Here you go.
That's right. Anyway, back to Treasury Wine Estate. $687 million. A lot of money. The write-off includes the high-profile 19 Crimes label. Could be even bigger. The total once half-year accounts are finalised. Treasury, under former Chief Executive Tim Ford, spent billions of dollars pushing into the US, including buying high-end California producer Dow Vineyards for $1.6 billion. He was hoping to turn that brand into another flagship brand alongside Penfolds. Hasn't worked. Treasury said the problem isn't so much the underperformance of its assets in the US, but more that Americans just aren't spending as much on wine, and that's what's hurting them. Treasury's share price is down 50% this year, including 1% yesterday.
The biggest M&A deal on the local market has been dumped, with private equity groups EQT and CVC Capital Partners walking away from a $5 billion deal to purchase insurance broker and underwriter AUB Group.
The two had spent a month doing due diligence, had offered $45 a share for the stock. It had been trading around $32 ahead of the bid. The company, AUB's share price tumbled 17% yesterday to just under $31. Now, AUB boss Mike Emmett put on a brave face. He said the due diligence had strengthened his conviction in his strategy. Bunch of shareholders out there thought they were going to get $45 and it's down to $31. I hope they have as much confidence in his strategy as Mike Emmett does.
Yeah, that's a good way to put it. Turning to international news now, Sean, severe weather across parts of Asia has claimed nearly 1,000 lives, with Indonesia and Sri Lanka among the worst affected by heavy rainfall, flooding and landslides.
3 top tropical cyclones coinciding with the northeast monsoon that typically brings heavy downpours to Southeast Asia this time of year have caused widespread destruction in the region. Peninsular Malaysia and southern Thailand have also received significant above-normal rains in the past week, according to data from the US Climate Prediction Centre. In Indonesia's Sumatra Island, a week of torrential rains intensified by a rare cyclone has left at least 442 people dead, another 402 missing, and officials warned casualty numbers will likely climb. That's according to Bloomberg. Storm Senya, which circled the Strait of Malacca last week, has now dissipated over the South China Sea.
Finally, Sean, mentioned this one at the top of the show, global consultancy Accenture. It's 800,000 staff have gone from employees. They've had a bit of a a facelift. They're not employees anymore. They're reinventors now, Sean, and they're part of what the company calls its reinvention services business.
So Accenture now wants to be clients' reinvention partner of choice by helping them to adopt to AI tools. That is the future, according to Chief Executive Julie Sweet. She was an inventor of Reinventor, as it applies to Accenture, back in June after the group united its, I've got to say this, strategy, consulting, creative, technology and operations units into a single business unit called Reinvention Services. Ouch. The consultancy wants to adopt to the explosion of AI and wants to advise companies on adopting the technology, according to a report in the FT. You may smirk at this, Michael.
I do a little bit.
Yeah. You might smirk at the reinventors at Accenture, but others have done similar things. At Disney, remember? Employees became Imagineers.
Imagineers, yes.
Yes. At Amazon, there's a bunch of people that became ninja coders.
Okay.
I'm all for it. I mean, we need to go wider and deep dive to find some low-hanging fruit when it comes to core competencies. We need to move the needle, ensuring our deliverables are game changers. And we should circle back and make sure our ducks are in a row, Michael.
Did you see me scrambling for your microphone button, just trying to turn you off halfway through that? I could not find it.
I have worked with people who, honestly, I don't think they actually knew what they were talking about, but they figured jargon would get there, and they are very frustrating to work with.
It's a smoke screen sometimes. You can just, if you throw enough of that stuff out there, you can generally kind of bluff your way through most conversations. I've done that with you before, Sean. Up next is Fear and Greed Q&A. Ray Attrell from NAB is your guest today. It's coming up in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Which is also where you sign up for that free daily newsletter. I'll put a link in the show notes as well. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 2nd of December, 2025. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson. That was Fear and Greed. Have a great day.